NinjaTrader is equipped with over 100 free pre-built indicators to aid in your technical analysis of the markets. Indicators can be applied to NinjaTrader charts, the Superdome, and the Market Analyzer. The Relative Strength Index, or RSI for short, is one of many helpful tools developed by Wells Wilder. The RSI measures speed and change of price action and is commonly used to determine when an instrument is overbought or oversold, confirm trend direction, identify potential entry and exit points, and signal market reversals. In essence, the RSI compares the strength of up bars versus down bars using the ratio of average gains to average losses within a user-defined period. The RSI in NinjaTrader consists of two oscillator lines. The results of the RSI formula, shown here in blue, and the average of the RSI, which is in yellow. Additionally, upper and lower lines are plotted at the 70 and 30 horizontal values. The default look-back period for the RSI in NinjaTrader is 14, and the average defaults to a 3 period. These values are established as recommended in Wells Wilder's 1978 book, New Concepts in Technical Trading Systems. But as with all NinjaTrader indicators, users can adjust these settings to meet their individual trading needs. Lowering the look-back period will increase sensitivity, while raising it will decrease sensitivity. The RSI is most commonly used to identify overbought and oversold conditions when 70 and 30 line crossovers occur. When the RSI reaches 70, typically traders consider markets to be overbought and anticipate a reversal to the downside. This often occurs in strong moves to the upside with higher highs. An RSI value of 30 is considered oversold, signaling a potential shift to the upside. Traders also often look at divergence between the RSI and price action. Bearish divergence occurs when the instrument's price moves lower and the RSI value increases. Bullish divergence shows just the opposite, price moving higher and the RSI value decreasing. Divergence can offer some clues about buying and selling power weakening and the potential of trend exhaustion or reversal. While these guidelines for using the RSI can provide greater insight into potential reversals, they're not immune to false signals, which is why using the RSI as a confirmation indicator with other technical analysis tools is recommended. Interested in learning more about all the free tools offered by NinjaTrader? Download NinjaTrader today for free unlimited use with futures and forex data.